Hello friends, now we are going to start with the new accounting standard, that is accounting standard 9, revenue recognition. Very good accounting standard, small accounting standard with small provisions given in the accounting standard, not a huge one. And I'll tell you the tricks how to remember the provisions and how to score at least 3.5 4 marks out of 5 marks question which is asked in the institute exam. Let's start with AS-9 revenue recognition. Now first of all, what is revenue? What is revenue? Revenue means from wherever we get the inflows in the business, from wherever we get the inflows in the business, means through sale, through commission, to interest, to dividend, from wherever the business gets inflow of cash. And after getting the inflows, how to recognize in the books of accounts, how to recognize separate income which we have received, that is sales, interest, dividend, rent, whatever it is, how to recognize in the books of accounts. So basically revenue recognition, revenue first arises and how to record in the books of accounts, this is all the accounting standard speaks about. Now let's go ahead, let's see first what AS-9 is saying. AS-9 is not applicable, means this is an exception, so these people are not covered under AS-9. Who? Construction contract, because separate accounting standard is covered. AS-19 lease accounting, government grants AS-12 as we have earlier studied in my video, and insurance contracts of insurance companies. Basically they are covered by separate statute. So all these people are not covered by AS-9. Who? AS-7 construction contract, AS-9 lease accounting, then government grants AS-12 and insurance contracts of insurance companies. Here IRDA comes into picture, Insurance Regulatory Development Authority. So for these people AS-9 does not apply. Now let's start with the meaning. Revenue. Revenue means gross inflow of cash received or receivable. As I told in the introduction part, revenue means gross inflow of cash either received or receivable. So because we follow mercantile system of accounting, accrual system of accounting, so received or receivable, other consideration arising in the course of ordinary activities of an enterprise. So basically revenue means gross inflow of cash either received or receivable. Other consideration means whatever way it comes, arising in the course of ordinary activities of an enterprise. So what is revenue? Anything which you receive or you are going to receive from the normal course of business, that is revenue. That is from sale of goods, from rendering of services, or used by others of enterprise resources yielding interest, royalty and dividends. So basically revenue means gross inflow of cash either received or receivable from the regular activities of a business. So remember this definition guys very well. Revenue means gross inflow of cash received or receivable arising from the ordinary activities of an enterprise, from sale of goods, from sale of rendering of services, or if some persons use our assets or something which we own and we give it on rent, or we get interest from such things, or we get dividend from such things. So all are inflows and all are considered as revenue. So I'll repeat one more time. Revenue means gross inflow of cash either received or receivable arising from the ordinary course of an enterprise, either by selling goods or providing services, or if we own some assets, if we give it on either rent, so rent will be considered as revenue, either we get interest, so interest will be considered as revenue, or we get dividend from our investments. So basically all such are termed as revenue. I hope it is very clear. So what is the moral of the story? Revenue means gross inflow of cash received or receivable arising from the ordinary activities of an enterprise, either through sale of goods or rendering of services, or used by others yielding interest, dividend, rent. That's it. Now revenue does not include certain realized and unrealized gains. Revenue does not include certain unrealized and realized gains. Means even though they are inflows, or even if they are realized, or even if they are not realized, revenue does not include these things. Profit on sale of fixed asset, changes in foreign exchange rates, changes in the amount of an obligation, natural increase in the herds and agricultural or forest products. So these four people are not included. So please remember this also. What it doesn't include: profit on sale of asset, changes in the foreign exchange rates, changes in the amount of an obligation. Now what do you mean by obligation? Liability. Liability. And natural increase in the herds and agriculture and forest products. These all plants, plantations, forest activities, they are not covered only in AS. Any of the AS, it is not covered. So AS-9, that is revenue, does not include profit on sale of fixed asset, changes in the foreign exchange rates, changes in the amount of an obligation, and any natural increase in the herds or agriculture and forest products. So these people are totally excluded from the revenue definition. Initially we discussed AS-9 is not applicable to. So construction contract, lease accounting, government grants and insurance contracts arising out of insurance companies. revenue does not include what? Profit on sale of asset, changes in the foreign exchange rates, changes in the amount of an obligation, and natural increase in the herds and agriculture and forest products. I hope it is very, very clear. Now, for any item to be recognized as revenue. So basically, which item should be recognized as revenue? Means revenue recognition means कौन सी चीज को हम revenue बोलेंगे? Which item will be recognized as revenue for us? Means is this revenue? Is this revenue? Is this revenue? That I am trying to say. Means for any item to be classified as revenue, there are conditions. It should be measurable. Please mark it important. And there should be reasonable certainty about the collectability. So for any item to be recognized as revenue, it should be measurable and there should be reasonable certainty about its collection. So guys, I'll mark important points with blue pen. First of all, revenue means gross inflow of cash, that one. I'll revise summary at the end of the accounting standard. What revenue does not include. And third point is, so you remember guys these three things, and I'll explain how to remember and how to write what things should be written in what type of question. I'll discuss everything. So we discussed AS-9 is not applicable to whom. We discussed what is revenue. We discussed what is not included in revenue. And now we are going to decide which items, not sorry who, my English is a little bit, no problem. Which items should be classified as revenue. So for an item to be recognized as revenue, very important, it should be measurable and there should be reasonable certainty regarding its collection. Let's go ahead. If the consideration is not measurable, suppose I am not able to measure how much amount I am going to receive or receivable, or there is uncertainty about the collectability even at the time when the claim is raised. So suppose if I am not able to calculate how much amount I am going to receive or it is going to be received, or there is uncertainty regarding its collection, then revenue recognition should be postponed to the extent of uncertainty. Mark this, very important guys. This is also point number 4 to be remembered. I hope it is very, very clear what I am trying to say or what I am trying to give my message to you. For any item to be recognized as revenue, it should be measurable and there should be reasonable certainty regarding its collection. If there is uncertainty, or I'll say if the revenue is not measurable, or if there is uncertainty regarding its collection, then revenue recognition should be postponed to the extent of certainty, to the extent of uncertainty. In short, when it becomes certain, recognize. If uncertainty arises later, that is after sale has been made or service is rendered, then a provision should be made to reflect the uncertainty rather than adjusting the original revenue itself. Sir, you are reading so fast. Wait. Revenue should be recognized only when it is measurable and when there is reasonable certainty regarding its collection. Now, if the revenue is not measurable or there is reasonable uncertainty regarding its collection, then revenue recognition should be postponed till the extent of uncertainty. This is point number 4. Next point, what they are saying, if the revenue is not measurable or there is uncertainty regarding its collection after the sales has been made, means the point at which you had made sales, means समझो आज goods बेचा, today we sold the goods, today it was very certain that I will get the money after 2 months, but subsequently after completing 2 months or at the end of the 2 months, now there is uncertainty or revenue is not measurable, then rather than adjusting the revenue, you need to create a provision against the revenue. Means what? Example I will give you. Suppose you have booked the sales of rupees 1 lakh today. Today you are very sure that you will get the money after 2 months because 2 months credit period was given. At the end of 2 months, you came to know that the customer is not willing to pay full 2 lakhs, or he is trying to postpone something, or he is giving some reasons that I will not pay, give me discount and this, that, all stories is creating. So at the end of 2 months, you are not supposed to adjust the sales amount. You should create a provision on the P&L debit side that so and so amount might not be received or so and so amount I have to give as a discount. So what they are trying to say, I'll summarize from halfway. First of all, what items are classified as revenue? Means for any item to be classified as revenue or any item to be recognized as revenue, it should be measurable and there should be reasonable certainty regarding its collection. Now concentrate what I am saying. If the revenue is not measurable or there is uncertainty regarding its collection, see what they have written here, or there is uncertainty about its collection even at the time when the claim is raised, when we raise the claim. In short, if the revenue is not measurable or there is uncertainty regarding its collection, then revenue recognition should be postponed to the extent of uncertainty. This is point number 1. Next point, what they are saying, if the revenue is not measurable or if there is uncertainty at the time of collection. Rather than adjusting the sales which you have booked 2 months back, create a provision for whatever amount you are having a doubt element that this might not be this or this might be given as discount or whatever the case may be. So why they are saying that create a provision and rather than adjusting the sales amount, because we follow matching concept principle. Income should match with my expenses. I hope it is very, very clear. Let's go ahead. I'll clear this everything. This was point number 4 and 5. Continue. Now, revenue from sale of goods. Now, this is pure sale of goods act, guys. Revenue from sale of goods is recognized only when the following conditions are satisfied. The seller has transferred the ownership. See, the bold letters I have already written in bold, so please try to remember. The seller has transferred the ownership of the goods to the buyer for a consideration. And all significant risk and rewards of the ownership has been transferred to the buyer. And the seller does not retain any effective control of the ownership of the transferred goods. Pure sale of goods act definition put in here, and there is no significant uncertainty regarding the collectibility of the consideration. So basically, guys, they are just trying to say that whenever you sell goods, when should the revenue be recognized? When the seller has transferred the ownership of the goods to the buyer, all significant risk and rewards of the ownership has been transferred to the buyer, and seller does not retain any effective title of ownership of the transferred goods. So please remember this. This is point number 6. In case of, I'll mark this with blue pen only as we have a trade mark here. So revenue from sale of goods should be recognized only when the seller has transferred the ownership of the goods to the buyer, and all significant risk and rewards of the ownership has been transferred to the buyer, and seller does not retain any effective control of ownership of the transferred goods. Guys, remember, try to remember as it is or similar way, because this is a provision. I'll repeat one more time for you. Revenue from sale of goods should be recognized only when the seller has transferred the ownership of the goods to the buyer, or all significant risk and rewards of the ownership has been transferred to the buyer, and the seller does not retain any effective control of ownership of the transferred goods. And the second condition is there should be reasonable certainty regarding the collection of revenue. So revenue from sale of goods should be recognized only when these two conditions are fulfilled. So basically they are round and round going on that same point. Which point I'm saying? Point number 4. Any item to be recognized as revenue, first point was that it should be measurable and there should be reasonable certainty regarding its collection. Let's go ahead, guys. Now, revenue from rendering of services. Revenue recognition in case of rendering of services by following two methods. One is CSCM, other is proportionate completion method. So basically, it's completed service contract method, proportionate completion method. In certain situations, provide full services and then raise the invoice and generate revenue. And in certain cases, part work is done, part money is collected and then recognizes revenue. So let's read it. Revenue is recognized when services is about to be completed and no significant uncertainties exist about the collection of the amount of service charges. Basically, they are again focusing on what item should be recognized as revenue. In case of completed service contract method, revenue should be recognized when the entire services are provided and there is reasonable certainty regarding its collection. In case of proportionate completion method, revenue is recognized proportionately, as the method name only suggests, by reference to the performance of each act. Revenue is based on contract values, associated cost, number of acts, or other suitable basis. Example, they have given tuition fees. I will give you this example properly. Suppose I am running a coaching class. So, who are my customers? The students. Students will enroll to my coaching classes. They will pay the required fees, and now they will pay the fees in two ways. Either they will pay in lump sum or they will pay in installments. Let's assume they pay in installments, or let's assume they pay in lump sum, whatever the case may be. How I will recognize the revenue? Whenever I start completing the syllabus in part. Means suppose 10 chapters are there and the fees is, let's assume, 100 rupees. So what is the average fees for one chapter? 10 rupees. 10 tens are 100. So the moment I complete two chapters, I can show revenue 20 rupees in my P&L. Whenever I complete next two chapters, I can again recognize my revenue of 20 rupees. So basically, proportionate completion method is nothing but revenue should be recognized in parts. As and when the services are provided, keep on booking the revenue. Whereas in case of completed service contract method, revenue should be recognized only after full services are provided and there is reasonable certainty regarding its collection. So no need to remember this. You can remember in your own way. No need to remember the wordings, because basically there are only two conditions. The revenue should be measurable and there should be reasonable certainty regarding its collection. I hope guys you are getting it. Let's go ahead. Now, third, if you remember, revenue includes what? Point number two, revenue includes what? That is, revenue means the gross inflow of cash received or receivable arising from the ordinary course of an enterprise through sale of goods or rendering of services. We studied sale of goods, we studied rendering of services. And third point we are going to study now, use of enterprise resources by others, yielding interest, dividend, rent, royalty and everything. So we are going on that. So use by others of the enterprise resources yielding interest, royalty and dividends. Now, very important guys, remember this properly. I'll start with a blue pen. Now, interest should be recognized on time basis. This is my point number 7. So interest should be recognized on time basis. From where do we get interest? Normally from banks. So banks normally credit interest in our bank account on timely basis. Either it is monthly or quarterly or semi-annually or annually. So it is recognized on time basis. Remember the watch which you wear, time basis. Royalties are on accrual basis as per the terms of agreement. Now royalty is always paid as per the terms of agreement. Basically you have to remember royalty on accrual basis means every year if somebody uses your asset, royalty is deemed to be received by you. Deemed to be received means आपको तो मिलने ही वाला है. So on accrual basis. And why accrual basis? Because India follows accrual system of accounting. And point number 9, dividend when they are declared in the AGM. So when a person should recognize dividend as income when it is declared in the AGM, because once it is declared in the AGM, they are supposed to pay the dividend to the investors. So dividend should be recognized once it is declared in the AGM. So please remember point number 7, 8, 9. I hope I am giving the numbering properly. Yes, point number 7, 8, 9. Interest on time basis, royalty on accrual basis, and dividend when it is declared in the AGM. However, if the above is receivable from other countries. Now, what is the meaning of other? However, the above is receivable from other countries means, let's assume interest from foreign bank I am going to receive, royalty from some foreign investors, and dividend also from some foreign companies. If the above three are receivable from other countries, which require exchange permission, or there is uncertainty regarding the remittance, revenue recognition has to be on cash basis. So again, they are focusing on the same point. Revenue should be recognized only when it is measurable and there should be reasonable certainty regarding its collection. So if interest, dividend and royalty are receivable from other countries and there is uncertainty regarding its collection, and how uncertainty arises, sometimes foreign remittance is not allowed by the government due to XYZ reasons, then such incomes, if they are receivable from other countries and if there is uncertainty, then such incomes should be recognized on cash basis. I hope it is very clear. So mark this important note. Revenue recognition when the delivery of goods is delayed at the buyer's request. Again, sale of goods are coming into picture. Suppose I have sold goods to you, but buyer says, sir, please keep these goods in your shop only. I'll collect after some time or some month or some days. So revenue recognition when delivery of goods is delayed at the buyer's request. Delivery is delayed at buyer's request and buyer takes title and accept billing. Only the physical possession of the goods lies with me. Buyer has taken the risk rewards, buyer has taken the ownership, title, everything. Revenue should be recognized immediately, but goods must be in hand of the seller, identified and ready for delivery at the time of the recognition of the revenue. I'll give you a simple example for this. Guys, if you have purchased goods from me, we have done the billing, everything. You have made the payment also. I've prepared an invoice in name of you. So can I say I've transferred all the risk and rewards to the buyer? I've transferred the title also to the buyer. But buyer says, sir, I'm not here for 1 month. So can you keep these goods in your godown for 1 month? So this is a case that delivery of goods delayed at buyer's request. So in such case, when should I recognize the revenue? The moment I've raised the invoice, the moment I've collected the money, at that point of time, revenue should be recognized. The only condition they are saying is the good should be ready for physical dispatch. Whenever you come, I have to give it to you. Identifiable means you can say, sir, these are my goods and they should be ready for delivery. Finish. Now let's go ahead. Revenue recognition when delivery of goods sold is subject to conditions. Now, whenever we sell goods, there are certain conditions involved. So in such conditions, when to recognize revenue? Point number 1, installation and inspection. Just think normally. Installation and inspection. Suppose, let's assume I am Vijay Sales. Vijay Sales deals in electronics. Suppose you guys purchase an air condition. So when I should recognize revenue from sale of air condition? When the air condition is installed, inspected means checked by you whether it's operating properly, everything, yes, 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 yes. Then you say, yes, sir, installation done, everything fine. At that point of time, I should recognize revenue in my books of accounts. Revenue should be recognized when goods are installed at the buyer's place to his satisfaction and goods are inspected and accepted by the buyer. So when the goods are installed and when you are inspected and you have accepted that the goods are okay, at that point of time I should recognize revenue. So in case of installation and inspection, revenue should be recognized when the buyer has accepted the goods and installation and inspection procedure has been completed. Sale on approval. The word itself says, suppose if I am a new businessman, or let's assume I am an existing businessman, I want to come out with a new product in the market. So how to target the audience? To give goods on approval basis. What is the meaning of giving goods on approval basis? Sir, use these goods for 15 days. Give me the feedback. If you like it, pay me the money or else return back the goods. So sale on approval. In such situations, when should I recognize the revenue? Let's see. Revenue should be recognized when the buyer confirms his desire to buy such goods by communication. Obviously, when you say, sir, the goods are very nice, superb quality, I'm ready to buy the goods, at that point of time, I should recognize the revenue. Guaranteed sales and warranty sales back to back. Now, what is the meaning of guarantee and warranty? I'll explain first. See guys, nowadays people have a confusion about warranty and guarantee. All products which we purchase, and when the seller tells 1 year warranty, 1 year warranty, 1 year warranty, 2 year warranty. By these words which they speak, warranty, warranty, warranty. By the word warranty means they are assuring that any repairs or renewals to be done, they will take the charge for that. Charge means they will do it free of cost. Now, warranty means any damages which are covered under the warranty that they will make good or they will repair it. It is not replacement of the entire product. So warranty means making good the repairs or the damages which have occurred and which are covered in the warranty list. It is not replacement of the entire product. So warranty means, you can remember in one line, making good the repairs and renew it and giving it back to the customer. So in case of warranty sales, when should I recognize the revenue? Let's see that, and then guarantee sales. So first I'll explain warranty sales, then guarantee sales. Sales should be recognized immediately, but the provision should be made to cover the unexpired warranty. Now let's assume I am a mobile dealer. I sell mobile phones to customers. Now, based on my past experience, I come to know that if I sell 100 mobiles in a year of one brand, let's assume Samsung. If I sell 100 mobiles of Samsung in 1 year, based on my past experience, I came to know that 10 mobiles came for some defects and I have to make it good and replace it, or maybe make good the repairing work and give it to customer. So what is my past experience telling me? Okay, for 10 mobiles, I need to create a provision. Let me be very clear. For 10 mobiles means whatever the amount I have to incur behind 10 mobiles, for that much amount I have to create a provision on estimate basis. So in the current year also, I should recognize the revenue immediately. Once the mobile are sold, I have to recognize revenue immediately. But I have to create a provision for at least 10 mobiles that might come to me for any damages or something. And how I will create a provision? Based on past experience. So what they are saying, trying to say in warranty sales, sales should be recognized immediately, but provision should be made for unexpired warranty. Now what is unexpired warranty? 1 year period is still left. So within 1 year, if somebody comes, I have to make it good to the customer and make the repairs and give it back to him. So what I'm trying to say, provision should be created for the expenses which I might need to incur if some customers come with some complaints. So warranty sales, revenue should be recognized immediately, but provision should be made for meeting some expenses to make good the product. Now guarantee sales. Revenue should be recognized as per the substance of agreement of sale or after the reasonable period has expired. Now in case of guarantee sale, normally companies don't give guarantee, they normally give warranty, but certain companies are there which give warranty as well as guarantee. So if a company gives guarantee, revenue should be recognized after reasonable time has expired. After reasonable time means now this also can be estimated or judged only on the basis of past experience. Let's take the same example, sale of mobile phones. I am giving you guarantee, any damage, any display problem, any circuit problem, any software problem, take new mobile from me, no repairs renewals. So now when should I recognize revenue in case of guarantee sales? After, let's assume 6 months have expired or 8 months have expired, then only I can recognize the revenue of the goods which I have sold 6 months, 8 months in the past. Why I am saying this? Because in such cases, the entire product needs to be replaced. So what they are trying to say, revenue should be recognized as per the substance of the agreement of sale or after the reasonable period is expired. Now, reasonable period also can be judged or estimated based on the past experience. So this means if I sell mobile phones to you today and I'm giving you guarantee, then I'll book revenue based on my past experience, that is 4 months, 5 months, 6 months. I'll see whether within 4 months, 5 months, 6 months any customer is coming back with a complaint. No, then I can book the revenue only after 4, 5, 6 months. So basically, what is the difference between warranty sales and guarantee sales? In case of warranty sales, I'll make good only the damages done and which are covered under the terms of contract. But in case of guarantee sales, the entire product will be replaced and the revenue should be recognized only after the reasonable time has expired. Now, consignment sales. Now, what is the meaning of consignment? Consignment, there are two parties, consigner, consignee. Consigner is the person who sends the goods to consignee. So, he is the owner of the goods. Suppose I am the consigner, you guys, the audience is my consignee. I am having capital, I am manufacturing goods, I have good machinery, everything. But I don't know the consumer market, where should I sell, who will buy my products. So you are the agents. Consignee is nothing but an agent. They know the entire market. They will approach me, sir, you have such good quality of products, take our help, or sir, you provide us the products, we will make your sales at a huge level. For that we'll charge commission. So in case of consignment sales, when should I recognize the revenue? Revenue should be recognized only when the goods are sold to third party. I should recognize the revenue only when you give me a confirmation that, sir, that so and so quantity of goods are sold to customers. Fine. Special order and shipments. Revenue from such sales should be recognized when the goods are identified and ready for delivery. Special order and shipments, I'll say example of Amazon. Amazon gives you delivery of goods at your doorstep. When Amazon will recognize revenue from sale of such goods, when the buyer accepts the courier or the delivery, buyer identifies the goods, only at that point of time Amazon will recognize the revenue in its books of accounts. Subscriptions for publication. Now publication means whatever magazines people order at their home. Sports magazines, car magazines, Miss India magazine, and many magazines come. So subscriptions for publication. In such cases, when revenue should be recognized, items delivered vary in value from period to period. Means if I am publishing magazines and I'm publishing magazines of different values, so that's what they are saying. Items delivered vary in value. Some magazines cost 100, some magazines cost 50, some magazines cost 2000, 1000, whatever. So items delivered vary in value from period to period. Then revenue should be recognized on the basis of sale value of the items delivered. So on the basis of sales value, I should recognize revenue. And items delivered do not vary in value from period to period. For example, newspaper. Let's assume Times of India newspaper. Let's assume the cost price of one newspaper is 10 rupees. For whom it is cost price? For the public. For the company, it is selling price. So Times of India, wherever I deliver, the price will be 10 rupees only. So items delivered do not vary in value from period to period. That is also subscription only. People subscribe to Times of India and then they get newspaper for the entire year. So 10 rupees is the constant price for everyone all over India. Now revenue should be recognized on straight line basis over time. Means I should recognize revenue on a constant basis because I know how many newspapers will be sold in a year, because people subscribe in the beginning only for the entire year. So basically publications and subscription revenue should be recognized in two cases. Items delivered vary in value from period to period, then in such cases on the basis of sales value. But items are of the same value, then on straight line basis. So guys, these points you need to remember normally. What is left? Installment sales is left. Then I'll revise. Installment sales means nowadays people have a habit of buying it on no cost EMI or on installment basis. Revenue of sale price excluding interest should be recognized on the date of sale. So now in case of installment sales or in case of no cost EMI, they say no cost EMI, but normally that EMIs include interest. So they are saying that revenue from installment sales excluding interest should be recognized on the date of sale, the moment goods are sold. Why excluding interest? Because interest should be recognized on time basis. Interest should be recognized proportionally on the unpaid balance, and that is on time basis. Why they are saying on the unpaid balance? Because interest is charged on the amount which is not paid. Basically, they are trying to say when you do any installment sales, revenue should be recognized on the date of sale. Interest should be recognized on time basis. Installation fees. It is recognized when the installation has been completed and accepted by the clients. So installation revenue from installation fees should be recognized only when the client accepts that the goods are installed, the AC is installed, the product is installed. At that point of time, revenue should be recognized. Advertising and insurance agency commission. Advertising commission is recognized when the advertisement appears before the public. Suppose you are target audience or you are the consumers. You are some businessman. Let's assume you are a businessman. You approach me because I'm an advertising firm. You give me one advertisement to be prepared. Now, when I should recognize revenue from advertisement? Only when the advertisement is produced before you, you publish in front of public, you say, no sir, the advertisement is very good, you have prepared it very well, now we will release your payment. So advertisement revenue should be recognized only when the advertisement appears before the public and the customer is satisfied. And insurance commission is recognized on the effective commencement or renewal date of policies. Suppose I am an insurance agent, you are my clients, you have taken policies from me. When should I recognize commission income in my books? Only when you renew the policies every year. So it is on the date of renewal, insurance commission should be recognized. That's it. And the disclosure part, when revenue recognition is postponed, the circumstances leading to the postponement should be disclosed. So this is all the provisions of revenue recognition. We'll have a quick recap, guys. First of all, AS-9 is not applicable to whom? AS-9 is not applicable to whom? AS-7 construction contracts, AS-12 government grants, then AS-19 lease accounting, and insurance contracts arising out of insurance companies. Next, we came to know what is revenue. Revenue means gross inflow of cash received or receivable arising from the ordinary course of activities of a business, from sale of goods, rendering of services, or use by others of enterprise resources yielding interest, dividend, royalty, rent, and everything. From now, revenue does not include what? Profit on sale of fixed assets, change in the foreign exchange rates, change in the amount of obligation, and natural increase in the herds in agriculture and forest products. Any item to be recognized as revenue, it should be measurable and there should be reasonable certainty regarding its collection. Now, if consideration is not measurable or there is reasonable uncertainty regarding its collection, then revenue recognition should be postponed till to the extent of uncertainty. Now, if revenue is not measurable or there is uncertainty regarding its collection, even after the sales have been made, means we have sold the goods in the past, at that time it was very much certain. Subsequent to that, it became uncertain. Then rather than adjusting the revenue, create a provision for the same. And this was as per matching concept. Revenue from sale of goods. The revenue from sale of goods should be recognized when the seller has transferred the risk and rewards to the buyer and the seller does not retain any effective control of title of the transferred goods. And the collection should be certain. It should be certain and it should be measurable. Okay, fine. From services, there were two methods: proportionate completion service method and completed service contract method. Same. Then interest should be recognized on time basis, dividend when it is declared in the AGM, and royalty on accrual basis. Fine. Then there were small points: installation and inspection, sale on approval, guaranteed sales, warranty sales. I have explained it very well. Consignment sales, special order and shipments, publication and subscription, installment sales, installation fees, and advertisement and insurance agency commission. I hope it is very clear. Keep on referring the accounting standard one time, two times. Remember the way I have taught you. Remember the way how provisions need to be written. And next session we'll go with the illustrations. Thank you, guys.